is responsible for monetary policy in the United States?
That's a great question. Um, I have no idea. No,
Let's give it a guess.
no answer. Okay. Okay, so repeat the question again. Who is responsible for fiscal as
Yes,
who's responsible of
monetary.
monetary?
Mhm.
Um, hmm, it's a great question. I'm sure it has something to do with the treasury. Um, Maybe not though. Let's just take a guess and say the president of the United States. Why not?
For which one? Both or for?
Let's go with both of them.
Okay. So that is not correct. On the fiscal policy side, it's Congress. So when Congress passes an appropriation, that is fiscal policy. If they pass tax legislation, that's fiscal policy. And that's the government basically telling the economy what it thinks it needs to be more successful. So they pass Tax Cuts and Jobs Acts, for example, they're incentivizing or stimulating a certain type of activity within the economy. Congress is doing that by amending current tax policy or passing completely new tax policy, for example. So fiscal policy is Congress.
Do you keep dreaming about when you'll be able to pursue your passions? It can be challenging to turn that dream into reality while providing quality care to your patients, addressing your student loans, and living a comfortable life. I'm Cassia Nunez, the CEO of Rhino Invest, and I'm here to share a better way, the Rhino way, which will make you financially independent sooner so that you can start to do more of what you are actually passionate about. Becoming a Rhino will increase your financial IQ by making you familiar with the concept of risk and return, the different asset classes available for investment, and how you can take advantage of those options immediately. You'll have access to curated courses, online calculators, wealth guides, checklists, and your own net worth tracker. All this and more with your Rhino account. So I invite you to take the first step towards realizing your goals by opening an account today. Thank you for joining me, and I look forward to working with you.
So fiscal policy is Congress. Monetary policy is the Federal Reserve executing its dual mandate to achieve maximum employment while keeping inflation in check. So they do that by revising interest rates, which is what we're seeing right now. The Federal Reserve is consistently increasing interest rates in a contractionary policy. If they were to decrease interest rates, it would make it easier for people to go out and get loans. Money would be cheaper, and so that's an expansionary policy. The other way they execute their dual mandate to achieve maximum employment and keep inflation in check is by changing bank reserve requirements. So what that looks like is all of the banks in the United States have a reserve requirement, which means if you have $100 million in deposits across all of your different depositors, all of your clients at the bank, the Federal Reserve says you have to keep at least 10% of that, or $10 million in your account.
Yeah.
Oh, if you want to make it easier for people to get loans, you would decrease that requirement to 5%. So now you have even more money that you can give out in loans. If you want to take money out of the economy to slow it down because it's overheating, inflation's getting too high, then you would increase that reserve to 15%. So the banks have less money to loan out, which means it's harder for people to get loans, and that is contractionary. So those are two things that the Federal Reserve used to execute on their dual mandate. Quick recap. Fiscal policy is Congress and taxes. Monetary policy is the Federal Reserve and manipulating interest rates and that bank reserve requirement.